Every now and then, you see a stock do something that just seems impossible. Well, today, we're digging into a company called FLYX, which just pulled off one of the most explosive moves you will ever see. Let's break down how it all went down.
Yeah, you heard that right. 130%. That's the return for a single day. That's a gain most people would be thrilled to get in an entire year. So, of course, the big question is obvious. How on earth does a stock that was just kicking around $3 suddenly blast off to over $7, even touching almost $9? That's the mystery we're going to try to solve today by looking at the technical clues the market left behind.
All right, so our first and, frankly, most important clue is all about who showed up to the party. See, a price doesn't move like this in a vacuum. It was pushed, and pushed hard, by an absolutely enormous crowd of traders. The scale of this jump is it's staggering. Okay, so the day before this whole thing kicked off, only about 57,000 shares of FLYX traded hands. But at the peak, that number exploded to over 115 million. That's not just an increase. That is a totally different universe of interest. I mean, just look at this. The old volume is barely a blip on the screen next to this absolute skyscraper of new activity. This tells us one thing for sure. This move was backed by real, overwhelming interest. And if you want to put a number on it, that's a volume growth rate of over 2,000%. When you see volume like that, you know something big is going down. It confirms this whole price move is definitely not a fluke. So we know a giant crowd rushed in, but just how powerful was the push they created? Now we get to look at the clues that measure the actual strength of this crazy upward trend. Check this out. The current price is trading way, way above all of its historical averages. Think of those averages, the 20, 50, and 200-day as the stock's normal cruising altitude. Right now, it's flying like a rocket, leaving its old flight path completely in the dust. That is a classic, textbook sign of a powerful trend reversal. Now, to measure this trend a little more precisely, analysts use a tool called the Arrow indicator. It's a pretty straightforward gauge, really. Its job is to tell you two things. Is the trend up or down, and how strong is it? And get this, for flags, the arrow up indicator is pegged at 100, while the arrow down is at 0. You literally cannot get a stronger signal of an uptrend. According to this thing, all the momentum is completely to the upside. But, and this is a big but, this is where our story gets a little more complicated. It's kind of like climbing a mountain, right? The higher you go, the thinner the air gets and the more dangerous it can be. And while this trend is unbelievably strong, other technical clues are starting to flash some pretty serious warning signs. One of the most common tools for this is the Relative Strength Index, or RSI. The easiest way to think about it, it's basically a speedometer for a stock. It tells you if the price is moving too fast, too quickly, and if it might be starting to overheat. So as a rule of thumb, an RSI reading over 70 is considered overbought. It's in the red zone. And where did FLYX clock in? 77.62. This suggests that the buying frenzy might have pushed the stock into an unsustainable position where it could be due for a cool down. And this little quote really puts another warning sign into perspective. This one comes from an indicator called Bollinger Bands, which create a statistical range where a stock's price is likely to be. For FLYX to be trading almost 50% above its upper limit, well, that's a true statistical anomaly. And when these really extreme things happen, what often follows is a snap back, a reversion to the mean. It's like a rubber band that's been stretched way too far. Eventually, it has to snap back toward the middle. And this sets up a classic conflict in our analysis. So now we've got two completely competing stories. One is a story of incredible strength and momentum, and the other is a story of extreme conditions and warning signs. Let's lay out the two potential paths forward here. Okay, the bull case is simple. If that massive volume keeps up, the momentum could carry the stock right back up to retest that recent high of $8.88. The bear case, though, argues that the stock is just stretched way too far, and a pullback towards its average price isn't just possible, but statistically likely. So for anyone watching this drama unfold, analysts have pretty much zeroed in on these key price levels. 888 is the ceiling it needs to break, 568 is the potential floor if it starts to fall back, and right there in the middle, that pivot point around 728, that could be the battleground that decides where it goes next.
So this leaves us with the defining question you always have in these moments. Are we watching a fundamental repricing of this company, the start of a whole new era for FLYX? Or is this just a dramatic, textbook example of an asset that simply flew a little too close to the sun? The next few trading days are going to tell the tale.